Good morning, Steve Reed in Hopkinsville, Tennessee, with the morning grain comments. Right now, we've got beans that have rallied now to a penny higher. Meal's up $2, corn's down 3 cents, wheat's down 2 cents. Stocks are a little bit lower in front of the Fed comments today, and the dollar's lower. Crude has rallied, copper's up, and in the soft markets, coffee and cotton are up, while cocoa and sugar are down. Yesterday, I gave a speech in front of farmers in southern Illinois. These are mostly wheat farmers that supply wheat to a mill there in Teutopolis. One of the speakers was talking about new programs that map out farms, and with phosphorus and organic matter, rainfall amounts, they can get a farm to average out a certain yield, maybe as high as 160 bushel wheat, whereas the field might have some areas that do that, and other areas might only do 50 bushel wheat. And it seems like phosphorus is the key, along with seed planting rate, which is a real interesting thing for farmers, especially in the wheat. Looking like good soft red winter wheat crop conditions. The expectations is that probably in April we'll start seeing a drier trend, which should help harvest down there. And certainly the number one cash crop in that area is wheat, followed by double crop soybeans. We also noted that today is Fed Day, and we'll see how much the Fed wants to increase rates. I think a lot of people are talking about eventually getting Fed funds to 5%, which would have inflation at 3.5%. They probably won't be able to get it below that. And it's hard to have a recession when unemployment is so low. So we'll just kind of see what the comments are as far as down the road. What do they do about inflation and rates? We also note that the ag attaché in Argentina lowered their soybean crop to 36 million tons, and that's down 9.5 from the USDA's official estimate. Argentina also announced a $27 million bailout for drought-stricken farmers. They are talking about combined losses of crops, corn, soybeans, and wheat could be as high as 20 million tons. But that money would only give farmers about $1.35 per ton, and that's just really not a lot to offset their losses. Soybean markets up to the Brazil crop and China demand. Meal probably looking at Argentina weather and their slow crush rate. And soybean oils talking about renewable diesel fuel and just how much of that new crush capacity in the U.S. will actually be built. Brazil farmer is selling beans while Argentina is not. We'll be getting some Canada stocks today, with wheat estimated at 22 versus 16 last year, canola 12 versus 8, and oats almost 4 versus 2 last year. Brazil corn now is cheap enough to work into Europe, and cheaper than Black Sea feed wheat, and some of the Eastern European farmers want some kind of import quota. We get ethanol data today, and then export sales tomorrow, which is extremely important. So U.S. wheat is still higher than Russia and Germany.